In 2017, President Trump gave America a tax cut. In 2025, he's giving it a sequel. Bigger, bolder, and with a $4 trillion price tag. The House has already passed Trump's mega tax plan, the One Big Beautiful Bill. And if you're wondering what's in it for you, the answer might depend on your income or your yacht size. Because this bill could reshape everything, from paychecks to prices to the national debt. $4 trillion in tax cuts and spending. On paper, it sounds like a win. But buried in the fine print are the trade-offs. Because in politics, every gift bag comes with a receipt. So what does all this mean for you? Let's break it down, simply. Okay, so let's rewind to 2017. President Trump was in office. TikTok was still just the sound your analog clock made, and Congress passed one of the biggest tax overhauls in decades. The corporate tax rate sliced from 35% down to 21%. Nothing says pro-business like a tax cut so deep, Elon tweeted in all caps. For individuals, the tax brackets shifted and the standard deduction nearly doubled. Translation? Filing got easier, and depending on your income, your bill might have gone down. Then came SALT, state and local taxes. Before 2017, you could deduct all of it. But that year, Trump's plan capped the deduction at 10 grand. So if you lived in a high-tax state like New York or California, you paid more. Now here's the key detail. The corporate tax cuts from 2017 were made permanent, but the individual cuts, they were set to expire in 2025. Unless Congress reapproves them, they're gone. So businesses got a lifetime membership. You got a free trial, and that renewal email is hitting your inbox. All right, now that we've covered what changed in 2017, let's talk about President Trump's 2025 sequel and what he's planning to bring back with upgrades. Introducing the One Big Beautiful Bill. Over 1,100 pages of tax cuts, spending shifts, and policy overhauls. First up, the tax cuts. The 2017 individual tax cuts, made permanent. Tips and overtime pay, now tax-free. Finally, a policy that benefits servers and strippers equally. The SALT deduction cap, raised from $10,000 to $40,000, a nod to high-tax states. Child tax credit, increased to $2,500 per child through 2028. And for new parents, a $1,000 MAGA savings account for each newborn between 2024 and 2028. Now, the spending side. $46.5 billion allocated for border wall construction and deportation efforts. $150 billion boost to defense spending, including funding for advanced missile defense systems. Cut taxes, boost missiles, slash healthcare, the holy trinity of modern economics. To offset these costs, cuts to Medicaid and food assistance programs, with new work requirements that could affect millions. All told, the bill could add over $4 trillion to the national debt over the next decade. Corporate cuts? Already rolled the credits. Individual cuts? Still in rewrites. And Congress has the final draft. Okay, so you might be wondering, what does that giant national debt number even mean? And why should you, sitting here watching this video, actually care? Let's interrupt our regularly scheduled programming for a 30-second crash course on how government debt works. No econ degree required, just a healthy fear of compound interest. The US government needs money to function. Salaries, defense, healthcare, the whole buffet. So the Treasury issues bonds. Investors, banks, funds, even other countries, buy those bonds and wire over cash. That's how the government tops up its checking account. But if demand is weak, the Treasury has to offer higher interest rates to attract buyers. That drives up borrowing costs for the government, because every new bond now comes with a bigger coupon payout. Every 1% rise in rates, that's an extra $350 billion a year just in interest. Stay at current levels, that's $5 trillion more over the next decade, just to cover the interest tab. So yeah, we're borrowing money to pay the interest on the money we borrowed. It works, for now, because the world still trusts the dollar. But the math is getting nervous. Okay, so here's the catch. You pass big tax cuts. You increase spending. That can overheat the economy, triggering inflation. Then the Fed steps in with rate hikes, which makes borrowing more expensive, including for the government. And that just piles on more debt. And guess who shows up? Jerome Powell, back in the group chat, casually nuking the housing market. Some analysts say it'll push the national debt past $45 trillion by 2035, which means higher borrowing costs, less wiggle room for emergencies, and a future where we're paying more just to stay afloat. So yeah, you might get a bigger paycheck next year, but your kids could be paying for it well into their 40s. So we just unpacked the debt spiral, but let's rewind for a second. Who actually gets the most out of this tax plan? If you're in the top 1%, the yacht club crowd, it's basically Oprah for billionaires. You get a tax cut. You get a tax cut. The average, around 26 grand, enough for a used Tesla or a weekend in Aspen with monogrammed ski gear. Middle-class families, think $50,000 to $90,000 a year, you're looking at a few $100. Maybe it covers your streaming bundle or lets you upgrade from paper plates to actual dishes for the holidays. Lower income households, the savings are smaller. And if you rely on programs like Medicaid or food assistance, new work requirements could make benefits harder to access. Some call it reform. Others call it red tape with a tie on. So yes, everyone technically gets a cut, but the higher your income, the bigger your tax break. So, how close is President Trump's tax plan to actually becoming law? Pretty close, but not over the finish line yet. The House passed it, barely, 215 to 214. One vote, which tells you just how tight things are on Capitol Hill. Most Republicans backed it, some calling it the crown jewel of Trump's second-term agenda. Others glanced at the $3.8 trillion price tag and suddenly forgot how math works. Next stop, the Senate, where even with a Republican majority, this won't be a walk. Moderates are pushing back, worried about deficits, inflation, and cuts to social programs. The bill could pass, or it could stall, and drag the GOP into a family feud right before the election. Meanwhile, President Trump is betting big, positioning this as a bold economic reset, not just for the country, but for his legacy. The next few weeks could decide whether this plan becomes law, or becomes another footnote in a very expensive game of political poker. Either way, you'll want a narrator to explain what happens next. All right, let's zoom out and recap the 2025 tax plan. Big tax cuts, bold spending, and a high-stakes gamble on economic growth. Basically, the fiscal version of bet it all on red. We broke down a 1,000-page bill with provisions for families, investors, small businesses, and some headline-making savings at the top. The wealthy stand to gain the most, but middle-class households could see some relief. And for lower-income Americans, the outcome may depend on what gets negotiated in the Senate, because in D.C., Sometimes help is on the way just means we're still in committee. We followed the ripple effects, from tax cuts to bond markets to inflation fears and a debt cycle that's raising eyebrows at the Fed and probably giving Jerome Powell heartburn. Now, the real battle begins as this bill moves from the House into the Senate's fiscal gladiator pit. So what happens next? President Trump is betting big on growth, on confidence, and on a comeback plan with a $4 trillion price tag. Some call it bold, some call it trickle-down economics, the sequel. Either way, it's the boldest tax move in a generation.
This was explained simply. Hit subscribe. We've got a whole world to unpack.